Welcome to First Mile's Climate Heroes. I'm your host, Bruce Bratley, founder of recycling company First Mile. On this show, we meet and learn from the climate heroes who are building solutions right now to tackle climate change. If you ask someone what they should do to save the planet, the answer is often to use less plastic, turn down the heating, or cycle to work. But few of us check out where our pensions or savings are invested or who provides our mortgage. Sustainable investing supports a healthier climate, fairer society, and generates good financial returns. And today's guest manages sustainable investments at Liontrust Asset Management, and his portfolio has a 77% lower carbon impact than the wider investment market. And we're going to be digging into that number soon. Dr. Peter Michaelis is Head of Sustainable Investment at Liontrust and is a pioneer in sustainable investment since completing his PhD, which is where I met him, at the Centre for Environmental Strategy in the early 90s at Surrey University. Pete, it's a huge pleasure to have you on First Mile's Climate Heroes, and welcome to the show.
Thanks very much, Dr. Bratley. I think you're one of the few people that ever use my doctor title.
Well, there you go. We could be doctors together and sound jointly incompetent with our environmental knowledge. But indeed, we have been in this sector for a long time. I think we both thought it was probably a nascent sector to get into in the early 90s. But in some ways, we were like 20 years too early and everyone's working up to it now, which has been a little frustrating. But, you know, like me, you've stuck at it and very much a pioneer in sustainable investing. So can the listeners hear your story? I mean, why did you choose sustainable investment as a way of addressing climate impact, and what's been your journey so far over almost the last 30 years, probably, with that young?
Yeah. Well, so I started in sustainable investment in the year 2000. I guess I got there. I certainly didn't ever have an ambition to work in investment. That was never sort of my driving ambition. But what I did do, as you say, I did my PhD in looking at sustainable development, particularly looking at the steel sector. Having done that, I then worked in the steel sector kind of as an environmental consultant, looking at how, the sort of environmental attributes of steel and it, particularly in construction versus concrete and cement. That seems to be the main rivalry between them. And then I was looking around for other opportunities, and I found a sort of job that was being advertised, actually as maternity cover, for analyzing businesses from an environmental point of view. And it was in this kind of rather strange place, the city, which I'd never ventured into. And I guess the rest is history. I joined the team. I found it absolutely fascinating. And I guess what I like about it, which is what you alluded to in your introduction, is that sustainable investing was relatively unknown. It was kind of ethical investing, and most people hadn't heard of it. And yet I sort of rapidly developed the view that as an individual, if you want to have an influence over the trajectory of our world, one of the great unused levers that you've got is where you invest your money. And so I think, to me, that spoke of opportunity, and that's why I've stuck at it for nearly 25 years.
Yeah. Now then, before we get into that, I want to go straight into the steel thing. So are you just sort of concluding the history? Because there's a lot of talk about green steel now, and you obviously did your PhD in steel, worked in steel. I'm sure you're looking at steel companies all the time if you're not invested in them. Are we getting closer to having environmentally friendly green steel? Is it a better option than concrete?
Ooh, well, how long have you got?
This is why I was getting this one out of the way early.
I mean, I think if you look at generally the path of decarbonisation, I think you can say we've got the technologies for transport, for electricity generation. For the majority of things, you can see we've got something that's economic, technologically well developed. Steel and cement are still pretty hard to substitute the current way of doing it. I think steel is more advanced than cement actually in its transition, and it's going to go to a mixture of using hydrogen for the virgin steel stuff from or an electric arc for the recycling. And I think you can kind of see that it's still very much. I mean, the trouble is you've got these old blast furnaces which have been around for about 100 years. The capital has been totally depreciated. And so people want to carry on using them for as long as possible. So you need regulation to say we're phasing those out. You've got to bring in the new hydrogen steel. And we're seeing more companies now starting to specify for the embodied energy in the materials they're using, starting to work with companies to get greener steel.
Right. And who's leading on the green steel sort of manufacture? Which country?
I mean, people are doing pilot projects in different areas. So I think you're seeing it in the US, where there's a lot move to kind of electric arc. In Sweden, there's H2 green steel as well. And in Spain as well, you're seeing ArcelorMittal doing it as well.
Okay, cool. Well, I just had to ask because you're the steel expert. I have to get you on again to talk about steel. So, how does sustainable investing work then? Because I've been looking at Liontrust portfolios, and you only invest in listed companies, so public companies. So, lots of listeners will be if they're expecting to hear about all the latest sort of private techie sort of startup green tech businesses that are sort of just starting up, they're going to be disappointed because we're just going to talk about sort of sustainable investing in listed companies, but also. You go down the list, and they're not necessarily what we'd sort of see traditionally as environmental businesses. Some of them are quite sort of normal, standard, if you like, boring businesses. So how is sustainable investing, working if, for example, you're investing in, I can't remember the name of a business, but let's say Apple or another listed business?
Yeah, okay. So, I guess at the sort of basic level, what sustainable investment is it's a service to our clients. So our people who put their money into our funds pay us a fee every year. And for that fee, what do they get? So what they get is that we aim to construct portfolios that invest in sustainable companies to deliver them strong investment returns. So we believe there's an alignment between those sustainable businesses and generating strong investment returns. We avoid investing in certain other sectors as well on their behalf. So we don't invest in oil, we don't invest in arms, we don't invest in tobacco, we don't invest in gambling. And we use our ownership of businesses, those businesses we invest in, we use our ownership of them to get them to improve the way they operate. So to decarbonize and all of that. Now, it's not a pure climate change fund. There are climate change funds out there. We believe that the move they're called the Sustainable Future Funds. So move to a more sustainable future, which is one that's cleaner, healthier, and safer. And climate change is incredibly important, and it's probably about a third of our companies in there are accelerating that move to a lower carbon future. But we also invest in healthcare, in things like digital security, and even things which are quite boring. Apparently, like insurance, but in a sustainable world, you'll need insurance. So we have these kind of themes which underpin what we do, and so when we report back to our clients, and I'll give you a chance to come in with a question, but when we report back to our clients, we report back on the performance they get. Have we done that bit about delivering the stronger investment returns? The type of companies they're invested in. So trying to illustrate why we think they are linked to a more sustainable world. And thirdly, we talk about the engagement that we've done and how that's improving the way that companies operate.
Explain the numbers in my introduction that your investments, your sustainable investments at Liontrust are having a 77% lower carbon impact than the wider investment market.
Yes.
Do you measure that's a huge impact, or the wider investment market's terrible? But I'm sure it's all your fabulous work, Pete.
So there's statistics galore around carbon, and as you know, there's a lot of stuff around boundaries and scope 1s and 2s and 3s and 4s. That statistic is saying, okay, if you take our portfolio, this is our global portfolio. If you take our portfolio and you look at the carbon emissions from the operations of the businesses in that portfolio and compare it to the carbon emissions from the operations of the index, so the MSCI UK, which will include Exxon, it'll include mining companies, it'll include all that. Our portfolio has much, much fewer emissions, like 3/4 fewer emissions. Why that's important is that it means that if there's a price put on carbon or a constraint on carbon emissions, we're very underweight that risk. What it doesn't mean is that by investing in our portfolio, you've removed a single ton of carbon out of the atmosphere. your portfolio is, but you've probably made everyone else's just a little bit dirtier. That's one metric to look at carbon through. The other is we don't invest in any oil, gas, coal companies in terms of the extraction of those. We also are in those businesses which are helping to accelerate the transition to a lower carbon future. So companies involved in energy efficiency or renewable energy, etc. So you've got to look at it through different dimensions in terms of carbon exposure.
First Mile is the UK's leading waste management service. We help over 30,000 businesses reduce their carbon impact with our award-winning range of recycling solutions. Go to our website, which is thefirstmile.co.uk, to get started today. If you're enjoying this episode, don't forget to subscribe. We have brand new episodes every Wednesday. So if you look back over the last sort of 23 years since you started in sustainable investing and as a pioneer in those early years, I mean, what are the key themes that have changed? You mentioned one, which is there's more money invested in sustainable funds, but what else is happening?
Yeah, I don't think I was a pioneer. I think there are people who've been doing it for 20 years before me as well, who sort of started out doing it. And so I think I've carried on their baton. But I think it's kind of gone through stages of acceptance, hasn't it? Where first you're ridiculed, then you're challenged. Or was it ignored, ridiculed, and then finally accepted? I don't know. It's one of those stages. I think we're through where people don't any longer say, well, what a bunch of rubbish that is. I think it's more, the sort of challenge is more sophisticated, which is good. It's more like, are you the best at sustainable investing? Are you doing it in the best way? So I think that's kind of welcome. I think the broadening out of sustainable investment to be more than just environmental technology is also important, whereas people realize that there are aspects around kind of societal quality, there are things around health, there are things about resilience as well, which are equally important to a sustainable world. It's not just about being low carbon. Circular economy is incredibly important.
Well, we're coming on to that, don't worry. Yeah. So you think it's here to stay? You don't think it's sort of some overhyped bubble? Because it's sort of a couple of years ago, there was this nothing other than ESG and sustainable investing, and the FT's full of it. It's died down a little bit now. There's some sort of anti-ESG movements coming out of the US. Do you think? But it sounds like you think it's firmly here to stay.
Definitely. I mean, and I think if you look at the kind of demographics of investors, younger investors just see it as much more of an obvious place to invest. They're coming through. I mean, it's going to ebb and flow a bit around a structural growth trend that's kind of been in place for 25 years.
Which is good. Yeah, it's good news overall. Do you think Rish's decision to open up a load of new licenses for drilling oil in the North Sea is a good idea? I mean, maybe you don't have a view if you're not in the oil and gas sector, because the argument is we need that oil, we need that gas to fuel the transition to a green economy. But we seem to get the yin, but not the yang when the announcement was made. It was let's drill for oil, but there was no real sort of clear investment in the green tech side of things. What was your view on that?
All I'd say is I think it's a bit bizarre. You got the US, which is putting $370 billion into clean tech in its Inflation Reduction Act. The EU is going full steam ahead on it, and the UK, as a sort of like proud island, is saying, no, actually, we're not going to do that. I think it's misguided. Yeah, there was
a big opportunity for us to lead in green after Brexit, but we seem to have squandered that somewhat. So coming on to the favoured subject of circular economy, the Circularity Gap report, I don't know if you've seen it or not, estimates that of all the goods in the world, only 8.5% are circular. It's still a very low number, 8.5% of materials that are circular. And all of the businesses that you're investing in have got supply chains, they're buying goods and services, they're probably saddled, as we all are, to a linear system of production. Do you think we're making progress on making products and services and goods more circular, or do you think we've got a long, long way to go?
We got a long, long way to go, but I mean, and the way I sort of think about it is just think of the sophistication with which things come into your household, via Amazon or any other shop. I mean, the sophistication of those supply chains is incredible, and then contrast that with the back end, your dustbin, which is maybe 3 different sections, and what happens to it afterwards. It's just nonsensical that we spend all this effort making these incredible objects that we use, and then we chuck them away in a bin. So no, I think we're immense. But there are some. I'll give an example of a few companies that we think give signs of hope as to how to use this. And it's not all pure circularity. Some of it's kind of downcycling. So there's a US company called Trex. They make decking, and they make decking out of basically used plastic with a bit of kind of used wood in there as well to give it a wood effect. You end up with a much more resilient, durable decking product. And in America, decks are a big deal. So there you're replacing normal timber. You're using a waste stream. You're generating, added value. So it's kind of, I guess, spiraling down. In a similar vein, plastic pipes, polypipe, and advanced drainage solutions in the US. Well, they now get to around about 50% recycled content. So your waste plastic goes into kind of infrastructure. Interesting. The reason why they can't go higher than 50% is certification. So it's not a physical barrier. It's just, they need to kind of get it through the certification system. And then you have packaging companies. So Smurfit Kappa, for instance, do cardboard packaging. Do you know them?
Yeah, know them well.
Know them well. So, card obviously is kind of one of the most recycled, maybe next to steel materials, next to plastic, which even in the EU is a lowly 40%, isn't it? But the good thing about card is the card that does end up in the environment breaks down very, very quickly. And so they use 75% recycled content, really high rates of recycling. And it's a sensible use. So there are some good business models out there that are developing based on using waste materials. We just need to see many, many more of them.
And do you think businesses are acting on the input side as well? And maybe talk about steel here, because we always sort of think steel has been like one material, but I'm sure there's lots and lots of different chemical compositions and types of steel. But where we see it sort of in the first mile and in sort of people's waste streams is we call plastic a generic material, but it's not. There are multiple different polymer types that need to be recycled in different ways. They've got different melting points, et cetera, et cetera. Two questions. Is that the same as steel? And should we be thinking about steel differently? But also, are businesses starting to act, and businesses that well in your portfolio, to try to simplify their inputs and outputs so that they're using less materials and simplifying the product or the goods at the end of the life, it's easier to recycle?
I think to a degree, I think people are now thinking about when they design the product about the life cycle of that product, what happens to it at the end. But I don't think you want to overstate it. As to steel, yes, there are very different grades of steel. Steel is used for car panels has to be really, really high tolerance, and that has tended to be more kind of virgin steel without the impurities and stuff. But I think that's getting better in terms of the way that they can make steel from high quality steel from recycled content as well. But so it is similar to plastic, and in a way, a circular economy is a misnomer, because you can't endlessly. You need to put in a lot of energy to circulate materials. So, where does that energy come from? There is a balancing act, and generally, I think most things go down a spiral. But you want to get as much utility out of each good as you can, and then that's making the most of the resources at our disposal.
Are we going to hit net zero by 2050? We'll be sitting in our rocking chairs by that point, sagely looking out of the balcony, decked with Trex, wondering what's going to happen. So, do you think we're going to get there?
I oscillate between thinking not a chance in hell, and I'll explain why. I think the kind of when I think not a chance in hell is just the enormity of what we have to achieve. We've got a whole world which for 100 years has been geared towards fossil fuels, all that infrastructure, all that, even like political capital that's been invested in being friends with Saudi Arabia, and all of these things. Transitioning that is quite hard to get your head around. What gives me hope is that when you look at, I guess partly what got us into the fossil fuel era, and there's a great picture which we refer to, which is Times Square in New York in 1901, and every single vehicle there is the Easter Parade. Every single vehicle is a horse and cart. And you scroll forward about a decade, and every single vehicle is, Ford Model T or whatever. It's internal combustion engine. There's one poor horse there. And that solves the environmental problem of lots and lots of horse droppings. So hundreds of thousands of tons of horse droppings, which is a big environmental problem that cities had. And you solved it within 10 years. And you think about all the infrastructure that needed to be put in place to do that. And that's kind of one of the reasons I'm optimistic, is that we always underestimate the speed at which we transition. If you look at revolution in smartphones, in cameras, digital cameras, time and time again, once we find a solution that's better and cheaper, it goes like a weed. Maybe weed's not the right way of putting it, but something positive anyway. And it takes over and it becomes obvious. And we're seeing that with investment in renewable energy now, that it doesn't make sense to build a coal-fired power station or a gas-fired power station. If you want cheap, rapid to deploy, clean, well, it doesn't even need to be, you don't even need the clean bit in the argument, cheap to deploy secure energy, then you go with renewables. And then that, I think, has immense power. So I'm going to say optimistic. I'm optimistic today.
So getting back to the individual, if someone's listening, can they invest in Liontrust, or do you invest through like other people's pensions? How do if someone goes, right, okay, so I need to look at my savings or my pension or whatever, what should they do? What's the first steps?
Well, I mean, the funds we run are called the Liontrust Sustainable Future Funds. So that's what it says on the tin, and we have various kind of risk buckets in terms of volatility, from pure equities all the way through to kind of lower risk corporate bonds. But what I would say is, get advice. There are some fantastic financial advisors out there who specialize in sustainable investing, and they can pick a sustainable investing product that fits your stage in life, your risk appetite. Also, tailor it to what really is important for you. I mean, we position ourselves as offering sustainable investment for people who generally want to invest in a more sustainable world, more broadly, the way we want. But if you wanted a specific fund just focused on climate change, then there are other options out there, for instance.
On this show, we're building a Hall of Fame for climate heroes, and we always ask our wonderful guests to leave something in First Mile's Climate Heroes Hall of Fame. So, what or who would it be?
All right, it's a combination of a what and a who. And it's James Lovelock, and it's James Lovelock and his electron capture detector.
Oh, wow. Tell us more. What's that?
Yeah. So James Lovelock was the most amazing. I mean, if you want to read about an amazing life, his life is pretty incredible. So he obviously came up with the Gaia theory. He also developed this electron capture detector, which allows you to sort of sense tiny trace elements of gases, basically. And he used it to identify the CFCs, chlorofluorocarbons, were all over the world, all over the atmosphere. And he sort of used his family holiday budget to go by himself on a Polar Explorer ship down to Antarctica. And he found these CFCs were there as well. And from that, we discovered the CFCs were damaging the ozone layer. But more importantly, it led him to start thinking about the Earth as a joined up system. And he developed the Gaia theory from that. And that I think has really led to a lot of the science or basis of Earth system science, of which climate change is one. So I think he's a absolute foundation in our understanding of how climate works and how our world works.
Amazing, and a brilliant explanation of that, and also great as a success story in terms of reversing human impact on the climate, because we've solved largely the hole in the ozone layer. So all very good. So what's coming up in the next sort of few years that's sort of getting you excited about the sort of world of sustainability?
Things that we think are really powerful things. I think the energy transition is going apace. I think we really are seeing big investment. We're seeing the benefits of that coming through in terms of energy security. So I think that's going to continue and grow and grow within healthcare. So providing affordable healthcare we think is critically important to a sustainable world. And I think all that we've seen in terms of vaccine development, for instance, through COVID. So we developed the COVID vaccine in under a year, from lab to getting in people's arms. The typhoid vaccine, I think, took 100 years. Speed of change is just phenomenal, and we can tweak that to providing vaccines for other conditions and also treating other conditions. So I think there's a huge amount of exciting, positive news to come out of innovation within healthcare. What else? I mean, AI. Everyone's talking about it. You can't move without talking about it. I think it could have some very positive applications around sustainable development, about making work more interesting, higher quality work. Remains to be seen, but there's certainly a lot going on within technology. I guess we still sort of got a balanced view on the kind of benefits of that. In one way, it's amazing in terms of access to knowledge and education. In other ways, it's has negative consequences where it's tied to an advertising model, which is just to push product at you. So those are some areas where we think there's kind of a lot of excitement around.
And brilliant. And on the energy transition, do you think we've got enough? Cornwall's now going to mine, I think, 8,000 tons of lithium, and it's relatively small in global terms, but great, we've got some at home. Do you think we've got enough ingredients to make enough batteries for the energy transition, and not just EVs, but storage and everything else? Or do you think that's just going to become a bit of a bottleneck until we can change the chemistry of the batteries?
I mean, as I understand, lithium's pretty common, isn't it? I mean, there's a lot of it around. It's just you kind of put the investment into to get it out of the ground. But I think there are going to be bottlenecks in some areas on there. But we will get through them. I think it's. I'm always a bit suspect when people kind of come up with another scare story around batteries and EVs and things, because the people who pay the advertising of the newspapers where this is put in. Conspiracy theory.
I heard it on Top Gear.
Yeah, exactly. Jeremy Clarkson says.
Yeah, exactly. It's going to be.
I think that it's kind of well underway, and I think most people you ask who've driven an electric vehicle say, "I'm not going back."
No, it is a classic. It's moving from a horse to a Model T. It's just better in every single way. But that's great. Pete, it's been brilliant having you on the show. I'm sort of slightly conscious of time, and we could go on about this for hours and hours and hours, really. Couple of questions before we go. What should we be all? You're a learned man. What should we be reading at the moment, or podcast listening to, or watching on TV? What are you into at the moment that you'd like to share with our listeners?
One podcast I like is Cleaning Up by Michael Liebreich. I think he speaks very well on that. He gets some really interesting guests in. I think that's one that I enjoy listening to. He also has a positive message. So Cleaning Up.
I've not come up across that. Cleaning Up. Excellent. That's very exciting. Obviously, after you've listened to all the episodes of Climate Heroes, you can go and have a listen to that. Pete, it's been an absolute pleasure having you on First Miles Climate Heroes. Good luck with sustainable investing at Liontrust, and thanks for coming on the show.
Thanks very much, Bruce. It's been a real pleasure.
I'm Bruce Bratley, and you've been listening to First Miles Climate Heroes, where we meet incredible people making an impact to tackle climate change. If you've enjoyed this episode, leave us a review and subscribe to the show. We have brand new episodes every Wednesday.